Hi, I'm Ursula from BOQ Specialist, and thank you so much for joining me today for the Learning Lab on practice setup and ownership. I have had 20 years banking experience and I specialize in commercial finance for medical professionals. I'm going to go into the presentation for us now. So I think one of the big things about which starting your own practice or getting into practice ownership is making sure that you surround yourself with the right professionals. And that would include, obviously, your financier. You need to have a really good accountant on board, and you'd also need to have a solicitor. And in some instances, if you're looking at buying property, it's not a bad idea to have a buyer's advocate on board as well. Now, the options that you've got in front of you are the possibility of starting your own practice from scratch. That would probably be the most risky of the three options available to you, but it does have its distinct pros. The fact that you own the practice, you can start it up, you can set it up how you want, you can run it how you want to, but it's really important that you do your due diligence before starting up your own practice. You need to know exactly why you're setting up in the area that you're setting up in. Is it viable to have a practice in that area? It doesn't help if you end up in Main Street where there are another 12 or 14 practices operating. How are you possibly going to be able to generate any business? So you need to really understand why you're setting up a practice in an area that you plan on setting it up in. Of course, the other option would be to buy into an existing practice. That definitely does have its pros. It's a running business. It's already generating income. You know how the practice operates. So it's really easy to slip in and buy a share in the practice. You hopefully will have some say in how the practice is run going forward, because you might have some ideas on how there might be some shortfalls in the way the practice is running, so you can contribute. So it is there are some definite positives on buying into an existing practice. Then the third option is purchasing a practice. That might be one that you're currently working, so it has the same positives in the fact that you know how the practice has been run, you know where the shortfalls are, you know what improvements can be made. And you'll be generating income from day one. Where the only thing is, if you don't know the practice and you haven't worked there before, it's just really, really important that you do your due diligence. Understand why the practice is being sold, and make sure that you know what the shortfalls of the practice are and what the opportunities ahead are. So in order to have to go down any one of those paths, it's really important that you understand what is required from a finance perspective. So the things that a financier would want from you is to have a really good understanding of your background. What is your experience? What kind of income have you been able to generate? And that's the information we'll derive from your previous financials and your gross fees that you've generated. Will I need to understand what your current employment is like? Or have you got any restrictions or restraints on trade? Where are you going to, based on where you're going to be practicing going forward? What is your vision? What are your plans for the practice that you want to buy? Are you planning on expanding? How long do you plan on staying there? Is the space that you're buying, does it accommodate your vision that you've got? It's really important that the bank understands what that is to get an idea of what your future financial requirements are going to be as well. And also there are personal factors, understanding your own personal position. If you've been on maternity leave, that would explain why perhaps your last year's financials aren't as good as they have been previously. It's really important to share that information with your financier so that they can fully understand your financial position and also help you design a product and the finance that is suitable to your personal needs. It's really important that you understand the tenancy lease terms of a property if you're going to be leasing a property. It also relates to what type of finance and the terms of the finance that the bank can offer you. So it's really important to understand what that is. And once again, as I said, the size of the premises is really important. So it doesn't help to buy premises that can only accommodate one surgery when in a very short period of time you're thinking of having 2 to 3 surgeries, because the cost of fitting out that one surgery and having to relocate might not really be viable. So you need to be very cognizant of the size of the premises, and the bank will want to know that information so they can see if that matches with your vision that you've got. Also really important, the bank will want to know the type of services that you're going to be providing and how does that compare to what your competitors are offering. Is there parking? Is it required? If you're buying, if you're going to start your own practice and you're being leased in the premises, are you able to run a practice from those premises? Have you found out that information from the council? Do you have enough parking to meet their requirements? And as I said, how will you differentiate yourself from your practice from the other practices in the area? Are you going to offer extended trading hours? Are you going to offer services that perhaps aren't being offered in that area at the moment? Who are your competition? How successful are they? Are they doing really well? Is there really a need for an additional dentist in that area? And as I said before, leading on to that, do you have room to expand? Is that what you want to do? Do you want to be able to expand the practice if it becomes successful? And do you have the room to do that? What are your funding requirements? And if it's a practice purchase or buying, it's really important to understand, why is the vendor selling all or part of the practice? Is it because they're retiring? Is it because the practice isn't doing well? What are the reasons for that? You need to have a really good understanding of what that is. For practice purchasing, you need to understand the terms of the vendor post-settlement. Will the vendor be staying on to help you settle in and to help transition his patients over to you? It's really important, because especially if you're buying a practice, you don't want all of the goodwill to walk out the front door, because that is really what you've spent all your money on. So you need to make sure that you are going to be able to still keep a reasonable percentage of those patients. You can invariably take into consideration that you are going to lose some of the patient base, but you want to try and maintain as much of it as possible. The vendor stays on and gives you a good recommendation, there's really a good chance that you're going to maintain a huge percentage of the patient base, which is really important. For a practice purchase as well, what changes will you make to the practice? What opportunities can you see for the practice? What are your plans for the practice? Those are really important to share those with your banker. For practice buying as well, it's really important that you understand your roles and responsibilities up front, that you have finalized those, because you don't want to be in a position that once you're brought into the practice, you then realize that you don't have much say in how the practice has been run, and you've just spent a whole lot of money buying into a practice that you have no say in what the future of that practice looks like. So it's really important to have clearly defined roles and responsibilities for yourself, and whether it's one or two other owners in the practice, that you really understand what your roles and responsibilities are. It's also really important to understand what type of marketing plans you have. How do you plan on marketing the practice? Today, it's almost impossible to have a really successful practice without having a really in-depth and thorough marketing plan for the practice. It's important too to get the financials of the practice that you're buying into, and to make sure that you assess them pretty thoroughly. A really good idea, that's why it's important to have an accountant on hand that can help you assess the financials and make sure that there are no curlies in those financials that you need to be aware of, things that that could be disconcerting and of concern. One of the things that we do notice often when people are selling a practice is that the last year there always seems to be an upturn in business, whereas the 2 previous years the business might not have been doing quite as well. They really give it a good push in the last year to try and up the purchase price. So it's always good to sort of look at the last 2 to 3 years to give you a good idea of, is this practice generally doing really well, and what is the real value of this practice? And the other thing is, your accountant can help you ascertain whether or not the purchase price for the practice is in line with what the financials of the practice are telling you. Cash flow projections for a new practice are critical. It is really important that you understand what it's going to cost you to run a new practice and what kind of financial requirements you're going to need. Are you going to need funds for cash flow? Do you have any cash? Are you going to need additional finance from the bank? How long is it going to take you before you break even? So it's really important to work those out, and very good to have an accountant look over them for you to make sure that they are realistic and reasonable. With the cash flow projections, so there are a couple of things that you'll cover off on. So it'll be the number of patients per day, and obviously when you're starting a new practice, those are not going to be, they're not going to be too many of those to start off, and you'll obviously build those up as you go. And it's really good to do it over a 12-month period so that you've got a really good understanding. The bank will want to look at least the first 12 months, but for your own safety and your own planning, it is really important probably to look at 3 to 5 years so that you can understand where you're going to be in 3 to 5 years' time. It's really not a bad idea to actually have a look at that and make sure that while you're in the practice and when you've started the practice that you're on track and that you've met those plans that you've set for yourself, those goals that you've set for yourself. You'd also want to look at the average charge per patient, and that will be based on the kind of dentistry that you're going to practice, whether it be general dentistry, or you're going to focus on ortho. What is it that you're going to be doing? So what will your average charge per patient be? And also really important, the number of days that you're going to work in a month. Are you going to work 5 days? Is the practice going to be open on a Saturday? Are you going to take a morning off or a day off to do your admin? How many days are you going to work per month? And then, of course, the expenses. Let's not forget about those. Those are a really important part of the cash flow projection process as well. So what is your rental going to be? What are the insurances that you can have in place? What are your loan repayments going to be for any of the loan facilities that you are going to take out to help you set up the practice? Your telephone costs, internet, wages, advertising and marketing, any materials that you're going to need, and utilities like electricity and that type of thing need to be taken into consideration as well. That's not an exhausted list of expenses, but that gives you a general idea of the primary expenses that you will incur if you're running your own practice. So here's just a really good glimpse of an example of part of a cash flow projection template that we can provide, and I'm sure any financier that you use will be able to provide you with one. Alternatively, I'm sure that if you've got a really good accountant, they'll be able to put one together for you as well. So as you can see there, cash on hand. So if you are going to have some cash that you've got to put into the practice, or if you're going to be asking for a loan, you'd be putting that in there at that point in time so that you can help you with the first couple of months until you start to generate enough income to cover the expenses. But in the first couple of months, when you're starting your own practice, it's really, really unlikely that you are going to be doing that. So you will need to have some kind of cash to help you with cash flow for the first couple of months. So you look at the number of patients per day, the average charge per patient, number of days worked, as I said to you before, and then you'd obviously be adding in all your other expenses will be added to that later on as well. So there are a couple of templates that we would normally use to get a couple of facts around starting a new practice, whether you're purchasing a practice or you're buying into an existing practice. So there's a lot of information that the bank will need. So we can offer you a questionnaire that will answer a lot of those questions that we require. I've covered off on quite a few of them already. So it's really important that you understand exactly what it is you're getting into, irrespective of which option you decide to go with. And then the common banking facilities that you'll need to set up. So things that you need to bear in mind. You obviously will need a bank account. You're going to want to be putting all that money that you're going to be getting somewhere. So you'll need a bank account, and also you'll need an account for all your expenses. You may need an overdraft facility, as I said previously, for cash flow. So you want to have that handy. And also you can use credit card facilities to make payments and to purchase things like consumables and to help you run the practice as well. And then most importantly as well, you will require merchant facilities to run the practice. If you decide to lease the premises, if you're starting up your own practice, it's really important that there are a couple of things that you need to look out for. First of all, don't sign the lease until your finance has been approved. Otherwise, you'll be stuck with the lease and you won't be able to start the practice. Fit-out companies and tradesmen cannot be paid until you've got the lease in place. So it's really important that you understand that. And the loan term for paying off the fit-out should not be longer than the total term of the lease. So, for example, if the lease is 5 years with no options to renew, then you want to make sure that your fit-out should not be paid off over more than 5 years either. If you get a rent-free period too, something that you need to try and negotiate up front, don't use it up while you're getting the fit-outs and setup done. You want to have the benefit of the rent-free period when the practice is open, because that'll assist you with cash flow as well. It's really good if you can set that up and manage to negotiate that. And that can be anything from 3 months to 6 months. So it's really worthwhile trying to see if you can negotiate that with the landlord. Information that required for your finance application if you are leasing the premises. So first of all, it's really important to know if there's an option at the end What is the monthly rent on the premises? What will the terms of the lease be? Do you have a rent-free period? Do you have the right to purchase a premises if it goes up for sale? It's really nice if you can negotiate that, because it's always good to have the security of knowing that, first of all, you've got the premises for a specific period of time, but once the practice is thriving and really doing well, the option to be able to buy the premises is really great. And of course, you want to know how much is the bond security and the bank guarantee that you need for the lease. So something else you need to understand up front. So if you're leasing the premises, in a lot of instances, the landlord will want security, and they would want that in the form of a bank guarantee. And the landlord can call on the bank guarantee if the practitioner doesn't follow the terms of the lease. So one of the things would be, obviously, if they don't pay, but there are a number of other aspects where they also may fall foul of some of the terms of the lease, where the landlord has the right to call in on the guarantee. The amount of the bank guarantee can be anything from 3 to 6 months worth of rent, and that basically will depend on what you negotiate upfront with the landlord. Security for bank guarantee is usually required from mainstream banks. It's either in the form of property or cash on deposit. BOQ Specialist can provide both secured and unsecured bank guarantees. There'll be costs associated with the bank guarantee as well, and the common costs that incurred would be application fees, usually up to about $950 up front, and then also be an annual fee, and the percentage will depend on whether or not the guarantee is secured or unsecured. So anything between 2.95% or 3.95% on the bank guarantee amount. It's really important to be organized and to allow a couple of weeks to process the bank guarantee. Don't leave it to the last minute. Make sure that you negotiate, you approach your bank pretty early on to get that set up in place as soon as you've managed to negotiate the terms with the landlord. The bank guarantee needs to be approved by the landlord solicitor or agent as well. The lease cannot be finalized until the landlord solicitor and agent has received the bank guarantee. Then, fitting out and equipping the practice. So banks offer a really, really cool facility called an escrow facility to help you with that. And this facility is used for setting up a new practice or can be used for renovating a recently purchased practice as well. And it is used specifically for tangible assets like fit outs and equipment. You will could possibly have multiple suppliers that need to be paid at different times, and the escrow facility allows for that. It's really important to know that the financier will look after all the administration of the payments. You don't have to worry about that. The payments won't be made without your approval though. But when you're applying for the facility, make sure that you allow for overruns as well, because what we find is often you may tweak some things as you go along, and the builder might charge an additional fee for that. You want to make sure that you've taken that into consideration. If you don't use it, it doesn't matter. With the escrow facility, you only pay for what you use. So if you do apply for a slightly higher limit, it's no big deal. It works pretty in a similar fashion to an overdraft facility. So as the money is drawn down, you'll only pay interest on what has been paid out. And at the end of the term, it will then roll into an asset finance facility. The interest is usually capitalized. You don't have to make any repayments until the fit out is complete, until it is rolled into the lease or the chattel mortgage, and there may be a small administration fee. So that also helps you with cash flow, because you haven't even started the practice yet and you're already incurring costs. So you don't want to be having to pay out anything just yet. So it works out really well for renovating or setting up a new practice. There are two primary asset finance agreements that you can go into, and they both have different aspects to them. It's really important to understand what they are. And once again, really important to have a really good accountant on board that can help you and guide you in terms of which option would be most suited to your financial needs. So they are generally used and designed specifically for you to capitalize on benefits from tax. So it's important to make sure that you choose the right one. So with regards to who owns the goods. With a lease, the financier will own the goods. So it's basically a financial lease. And with a chattel, the borrower will own the goods. We can claim the GST under the purchase. With a lease, it'll be the financier because the goods are in the financier's name. With a chattel, the borrower can claim back the GST. The finance terms, generally 1 to 7 years on both options. What can you claim? So with a lease, you can claim the full repayment. So that'll include the principal, the interest, as well as GST, which is added to the repayment. You can claim that full amount back from tax. Whereas with a chattel, you can only claim back the interest, the depreciation, but don't forget you've also claimed back the GST upfront. What type of assets would you generally have a lease? They would be low depreciation, which is generally your fit out. So it is often financially more beneficial, or from a tax perspective, more beneficial to claim back the full repayment because the asset is low depreciating. Whereas with a chattel, you would use it for high depreciating assets like equipment. Can you have a residual or balloon at the end of the lease term? With a lease, it is compulsory. With a chattel, it's optional. Is there GST on the asset finance contract? On a lease, yes, there is. Monthly, which you get to claim back on a monthly basis, or quarterly, however often you claim back those repayments from the tax, from the ATO. Or on a chattel, no, there isn't any GST. Remember, you've claimed that up front. So for practice purchase and buy-ins, what is the breakup of the goodwill and equipment? It's really important to understand what the breakup is because the types of facilities used for both will be very different. Sometimes you'll find if you're buying into a really old practice, there may not be any value in the equipment at all, and there may just be value in the goodwill, but it's important that you understand what the split is. So for instance, in this case, you've got a practice that is selling for 350,000 is the goodwill, and you're looking at about 40,000 for the plant and equipment. So both products will be financed very differently. So it's important to understand what that breakup is. And sometimes when you are negotiating with the vendor, they might not mention that, but it's important to understand upfront what that is. So for practice purchase and buy-ins, you would also need to have, in most instances, insurance, so life insurance, that is at least equivalent to the value of the loan that you've got. However, you don't necessarily only need to have that amount. You can obviously have an amount that you think is right for you, but you need to have satisfactory cover. It will need to meet the financier's minimum requirements as well. Income protection may also be required, and that would need to at least cover the monthly installments on any leases or chattel mortgages that you have as well. And for practice purchase with the tenancy lease agreement, just bear in mind, as I've said before, settlement cannot occur without a tenancy lease agreement in place. So it's really important that you've negotiated all of that before any payments will be made to anybody. It's really, really important because there's no point in you buying a practice and there's no lease in place, because the landlord can very easily kick you out, and then you've spent all that money on the goodwill for a practice that you can't even open. So the loan for goodwill, generally speaking, financiers, especially specialist financiers, will give you up to 100% of the value of the goodwill, and the value of the goodwill will be determined by the financier. BOQ Specialists use EBITDA to determine that. Generally, it needs to be paid off in full over 15 years, and you've got the option of variable or fixed terms. So you can actually split the loan. You can have a portion of it variable, a portion of it fixed, and in some instances, you can actually even have an interest-only period, which once again will help you with cash flow, especially when you're not sure of the practice. It might be not a bad idea to start with that. So for security, so the options that the banks would take would be general security agreement over the entity that owns a practice, and also property can be used as security to buy the goodwill. For the asset finance facility for the equipment, generally paid off over 5 to 8 years. The loans are generally variable or predominantly fixed terms. security of the assets, finance was basically all that is needed, and the asset finance facility are basically you've got lease, chattel, and very rarely today do people take out a hire purchase option. So I thought I'd also just go through a case study for you, just to give you some idea of the kinds of things that you need to be aware of and look out for when purchasing a practice. So we had a client in his early 40s. He worked outside of dentistry and then decided that he'd always had a passion for dentistry and decided that he'd go back to university and get a dental degree. And when he approached us, he'd been working in the same practice for about 5 years since he graduated, and he'd also completed a diploma in implants. So basically what his plan was to focus on high-end work, and in particular interest in periodontics and oral medicine and cosmetic dentistry. Looking at his previous financials and asset position, he'd built up a really good asset position, and his financials showed that his gross patient billings were roughly $500K as an associate, which is pretty decent. So he'd been billing a reasonable amount before wanting to start to purchase a practice. The purchase price of the practice was $374,250. There was no breakup of goodwill and equipment, so the valuation was conducted on the assets of the practice. Information about the practice. So the vendor was in their late 60s and looking to reduce their hours worked. Didn't want to manage the practice anymore. They didn't want to have the stress of that, and wanted to just be able to go to work and not worry about that side of practicing. Happy to stay on. She'd owned the practice for over 40 years, so it was well established, and she was working there 4 days a week. The equipment and fit out of the practice was very old. It was in a really good location though. The train station was just across the road, so a lot of passing traffic. There were 2 associates working there at the time. One was working 2 days a week and the other 1 day per week. There was a lease in place, 3 years with 2 options to 3 years to renew the lease. The size of the practice was about 100 square meters with 2 surgeries in the practice. No marketing had been done on the practice at all. Implants were referred out, no OPG, and not much endo. Not open on the weekends, half day on Mondays, and Tuesday to Friday open from 8:30 to 4:30 p.m. So it's really important to get a good understanding of how the practice that you're going to buy, how they work, and what opportunities can you see. The practice financials for the past 3 years, so the gross fees for year 1, $514,000 with a net income of $152,000. So we could add back depreciation, which is about $2,000, which means that the available income we could pick up was about $154,000 on year 1. Year 2, the gross fees were $485,000, and year 3, gross fees were $485,000 as well. So not a big difference. So nothing really to be concerned with there. And the possible changes that could be made based on the information that you have about the practice. So it's really important to do your due diligence. So you can see that there would be additional spend in terms of marketing. So important to note that when you're doing your cash flow projections, and also the fact that there needed to be a bit of a renovation on the practice because really looking old and tired. So you need about $100,000 to do the fit out, and also purchase new equipment for about $200,000. Opportunity, once again, also to extend the opening hours during the weekdays, especially if they're only open half day on a Monday and close and finishing at 4:30. Opportunity to maybe offer services after hours. Important, once again, to be sure of what's happening and the practices around. Are they open? What are the extended opening hours? Is there an opportunity to open up on a day when they don't have extended opening hours, or do they have extended opening hours at all? And then, of course, also to be available on a Saturday. So the loan amount that my client wanted was $282,250. They wanted to put down a slight deposit, and they were looking at a 60-month term for a variable rate. So basically the way you pay down the loan can also depend on whether or not you want to pay it down really quickly. But when you're starting off, it's really good maybe not to have such an accelerated pay down option. I mean, as I said before, it's possible for you to maybe look at a balloon of, say, 70%, so only pay down 30% over 5 years, or there's a possibility of having a much lower balloon. It really just depends on what your cash flow position looks like. So the monthly installments on a facility of that size, you're looking at about $2,117 per month, and the security that will be taken would be general security agreement over the entity purchasing the practice. So for the chattel loan, a loan of about $400,000, a term for 7 years with no balloon after 5 years, you're looking at monthly installments of around $5,285. It's important to know what these things are upfront. So when you're doing your cash flow projections, you know exactly what your outlays are going to be right up front. So that concludes the case study. And if you are going to buy the property as well, which often does occur when one is buying a practice, the practice owner may want to sell the property as well. So you need to understand what kind of loans are available to purchase the property. So loans can be structured in a number of ways. They can be structured into a super, they can be put in your spouse's name, they can be put in a company or a trust, really just depending on what works best for you. And once again, it's really important to speak to your accountant to get advice in terms of how to structure that loan. Security is generally standalone with the property, or depending on a number of components, it might need to be crossed with residential property as well, but that doesn't happen very often. It just depends on, for instance, the value of the property. If the value of the property, if the sale price of the property is over and above what the valuation is, then you might need to use residential property or some other form of security to secure the loan. Outside of super, mainstream banks generally will offer up to a 70% LVR. Specialist medical financiers will offer you up to 100% LVR. Within mainstream banks, within super, mainstream banks don't generally offer any option to finance through super, but specialist financial financiers, there are only a few of them that will do it today, will offer you up to 90% LVR for owner-occupied premises. Bearing in mind that the balance needs to come out of the self-managed super, so that deposit of 10% plus any other cost related to setting up that facility in super needs to come out of your self-managed super. So the funds need to be available there. And there'll obviously be very specific terms and conditions relating to finance through super. You still, with all options, you have fixed, variable, and line of credit options. So once again, you have the option to structure the loan, to have a portion of it fixed, a portion of it variable. And at any stage, if you feel that you want to convert from variable to fixed, you have the possibility of doing that as well. You have the option of interest only or principal and interest options as well. It's important to look at all these. Often what people tend to do is they get quoted an interest rate by a financier, and it sounds like it's really good and a really low rate, but they forget to ask for the ongoing fees. BOQ specialists do not charge any ongoing fees on their loans, but a lot of our competitors do. They charge monthly fees, annual fees, quarterly fees, and some of them can be as high as an additional 1% or more above what the rate is that they quote. So it's really important to make sure that when you are looking at quotes from banks or interest rate options, to make sure that you factor in all the components and you're comparing apples with apples. It is a really good idea to use, can be a really good idea to use your SMSF to purchase the practice premises through, but it's really important to obtain a financial advice to see whether or not it actually is right for you. The beauty of it is that you've got a low risk tenant. Well, you should hope so, considering the fact that it's you. You'd hope you'd be paying your rent every month, so that's a bonus. It's a fantastic savings plan, and you lock in your rent at the purchase price up front. It is a great way of creating wealth. It's asset protection. The beauty of self-managed super fund is that the property is also ring-fenced within the self-managed super fund in a bare trust. So if for whatever reason something doesn't go right and the bank needs to have some recourse if you're not paying the loan, they cannot touch anything else in your self-managed super fund. They're restricted to the actual property as it's ring-fenced in a bear trust. So it does secure the rest of your assets in your self-managed super fund as well. There are obviously huge tax advantages, advantages to the business. If you can own the property, you know that your premises is secure, your location is secure. Sometimes it might be difficult to finance the property outside of self-managed super fund as well. So the other thing is that with the self-managed super fund, it's really important to have some funds in the self-managed super fund, because you will require those to pay some of the upfront costs required as well. So with buying a commercial property, obviously you can secure your location and then thereby securing your future. So it is really worthwhile considering. So at BOQ Specialist, you can borrow up to 100% of the purchase price of your practice premises with no lender's mortgage insurance required. For a limited time at the moment, we are also waiving any establishment fees, so up to a maximum of $2,500 per application. All applications for this need to be received before the 30th of May and need to settle by the 31st of July. Our commercial property loans also offer you the ability to choose a flexible loan structure, repayment terms that will suit your cash flow needs. As I said previously, there are options to have interest only. You can also benefit from competitive fixed or variable rate options, and you can have a combination of both if you like as well. And you've got the opportunity to structure through your SMSF, a partnership, a company, or a trust entity. If you are wanting to borrow in your SMSF down the track, it's really important that you structure the loan correctly right up front to be able to do that as cost effectively as possible down the track. So once again, make sure that you speak to a financial advisor or your accountant to assist you with that. Thank you so much for joining me today. If you've got any questions that you'd like to ask, or you'd like to find out a bit more about anything that I've covered off on today, please feel free to give me a call. You can scan the QR code on the screen that will download all of my information for you. And I look forward to hearing from you soon. Thank you very much.